Welcome back, traders and investors. Our final guest of the day, Todd Schoenberger, founder and managing partner of LandColt Capital LP. Todd, how you doing today?
I'm doing fantastic, Joel. Thanks for having me.
Yeah, you do sound like you're in a good mood. Well, last time we had you on, you were pretty bullish, and you were staying the course. Now, we had an interesting day yesterday. Not only did we take out the all-time high close by nearly 13 points, we took out the former all-time high by almost 12 points. Does that get you a little nervous we might have had a blow off top there?
Absolutely not, Joel. We're going to continue to move higher. Look, there's not anything right now, and just repeating what I talked about in the last show, there's nothing out there that's going to stop this bull rally. You don't have the one true catalyst that traders are expecting to really experience. And as a result, stocks are going to continue to move higher. And today should be the day that you'll see the Dow cross the 17,000 mark, and I would be shocked if we didn't close above that level today.
Okay, so you're looking for continued momentum. Now, with the market rising like this, it's getting more and more difficult to find stocks with good risk-reward ratios. And I try to identify a couple. I mean, you can chase the momos if you want. You can, buy stocks breaking out at new all-time highs. But do you have anything out there that you got on your radar that still looks cheap to you?
Well, I got to say, I'm looking at oil stocks, and you have a valuation on these oil stocks. The sector has done extremely well this year, but it looks to be it's going to continue doing well. You have a global economy, even though the IMF came out and actually downgraded global growth. You're still looking at close to a 2.5% clip in global growth. Plus, we can also add in the ancillary factors. You have geopolitical events. You have a potential hurricane. That's a topic that we're hearing about on the East Coast. So you are going to continue to see oil prices rising. You're going to have companies like ExxonMobil, a Chevron, a ConocoPhillips that should continue to hit higher highs. And as a result, those are the companies, they should be on your core part of your portfolio, and that's where you could be focused. But those are three that I would that are my favorite.
Okay, ExxonMobil seems to have a little trouble as of late. Maybe some exposure that it has in Iran. So you're looking at this pullback to just above the $100 level as a support and a possible entry point on the long side.
Well, look, absolutely, because with Exxon, here's one of these companies that they're like buying. It's like buying baseball cards. You buy the shares and you put them in your attic. This is a company that you're looking at. The single largest shareholder of ExxonMobil is the teachers union in this country. It also, you see how it's represented in not just geopolitical news, but also political news that takes place in Washington. And then you can clearly look at demand, supply and demand numbers. And these are figures that are going to continue to help out with ExxonMobil. So this is one of those core holdings. We always talk about, everybody talks about asset allocation on your show, Joel. I talk about core and explore. Your listeners should have their core holdings. That should be the bulk of their portfolio, and then a smaller portion be their explore holdings. Do something that's a little bit more risky. But if you're in that core portfolio side, you definitely want to look at the key three big oil companies with Exxon, Chevron, and ConocoPhillips.
Okay. And, with the big run-up yesterday, I mean, did anything, I'm not sure, do you use, price targets, or do you use trailing stops, or do you just keep buying and never sell?
20% trailing stop, and that's something that I would have to recommend to listeners, but also for any investor, because you want to have some type of a safety net. So there's nothing wrong, especially if you're doing some type of online trading. You can simply add in a 20% trailing stop, and that would help on any sites if you have any type of event that could be catastrophic that just brings the value down. But here's the thing. Going forward, like I said at the beginning, there's nothing out there that truly is going to be your catalyst for any type of selling. I mean, your traditional way of looking at things, normally with the polar vortex, so-so earnings, geopolitical events, the GDP print, how catastrophic was that? Normally that would be the absolute catalyst to get the bears out of hibernation and get this market selling. You don't see that right now, and as a result, the only way to look is higher, and that's the way I'm feeling right now. I'm going to remain bullish.
Okay, so you think that GDP figure from last week was just an aberration, and next when the figures come out next time, it will reverse the trend?
Well, here's the thing, Joel. I'm not of the belief that, yes, I do believe the next GDP report will be better than the negative 2.9 print that we just saw. With that said, though, there doesn't seem to be anything that will stop this market, and here's the reason why. It's about yield. You can't find yield anywhere right now unless it's in the stock market. So investors know this, and therefore they're willing to assume the risk by going into the market and obtaining that yield. And that's going to be one of those big tests. That's where we hit the crossroads on Wall Street when interest rates start rising. And when you start seeing that, you'll probably see those investment dollars leave equities and move more into the fixed income side. But that's not until next year. So right now it's good to remain bullish and stay to that pattern.
What about these IPOs that have been coming out lately? Sometimes people say, a wave of IPOs might be symptomatic of a market top. You also can look at it from the perspective with all these companies buying back their own stock. There's less and less stock available on the market. First of all, are you looking at any of these IPOs? And second of all, is that any kind of a bearish indication to you?
Well, I don't see it as a bearish indication because remember, companies that, and you are right, when you have a bulk of companies that do go public, the feeling is that they're taking advantage of higher valuations in the market. So GoPro will be a good example of that. But I'm a big fan of a company like GoPro. As for Twitter, I wasn't a big fan of that IPO, and obviously you can see what's going on with the stock price. But here's the thing. One thing I like to look at is the amount of people that are invested in the market. Right now, and this is key for your listeners, 52% of Americans are invested in the stock market, whether it's direct investing or indirect investing, maybe through a pension plan or something like that. And therefore, you have to wonder about the wealth gap that's happening in this country. So you have a number of people, just a little over half, that are taking advantage of the bull rally that's taking place, and then you have the other side that they're missing out. So unfortunately, that's something that I think is probably going to be a social issue down the line, but it's something that will probably be addressed in this country probably in the next year or two.
Have you tried to purchase this GoPro at all? I mean, this thing has just been a rocket ship. Did you get any shares off the IPO, or you've been trying to chase it in the open market?
Well, I've been following it. I know I did not buy any of the shares, but I'm a big fan of the product. So I think that alone is going to be, it's a category killer product. For your listeners, if you're looking to invest in a company or any type of a service or product, if it's a category killer, meaning that it's something that is going to create a category, such as the iPhone, for example, here, GoPro with these cameras, same exact situation. Something that there isn't a key competitor out there right now, and therefore they're creating a new category. That's a company you want to focus on. That's why GoPro is doing so well right now.
Okay, yeah, it is. And you just think they're going to come out with other variations of the product, or do you think this is just a one-trick pony here that is going to be able to make it with only one product?
Absolutely not. This is a company that will come out with other products. Look, GoPro, if you just based on what their management team has been saying, this is just the start. I mean, here the idea of being able to take their own personal reality and moving it into a high definition, very exclusive, very personal video, this is just a start because keep in mind you have a camera. Now, eventually, they would like to have smaller devices that they can sell and obviously look for wider margins. So, again, I love this company. I think they have some great things on the horizon, and your listeners are, it's something to definitely check out as far as looking at that product.
Okay, Herd Capital is asking if you, and I've never heard of it, the chemical activity barometer in your evaluation of the economy. He says it's been steady over the last few reports and didn't project the big Q1 drop in GDP.
I don't watch that. One thing I do look at, though, is the amount of demand as far as seeing with items such as oil or how much energy is actually being consumed. One thing as a proxy when you're looking at growth in the overall economy is how much energy use is actually taking place, because that doesn't mean just on the household level, but also on the corporate level. And when you're looking at that corporate level, you want to know, are companies, you see this in manufacturing data, how are they growing? Are they even building up inventories? And that's separate from chemicals. But the point being is that you want to continue to look really into the weeds of these companies and how they continue to grow and if they are expanding. And that usually means that they're going to hire more labor. They're obviously going to sell more products, more services, things to keep in mind for the long term.
There's always rotation in the market, and some of the Momo sectors have been popping up as of late. Are you following the 3D printing sector at all?
I got to tell you, these 3D printers, I understand that there's one 3D printer that's creating a liver, a human liver. This is amazing stuff. I'm still learning my way with this industry, but again, it's a category killer service, and it's one of those items that is going to be. It's probably it's in its infant stages right now. So I'm not tracking it. I find it compelling and fascinating, these stories that I'm hearing, but the question will be, can you make money off of it? And that I do not know right now.
Not enough fundamentals for you, really, to be
Right.
putting your hard-earned dollars towards it. So that definitely a good take. How about the fuel cell sector? It had its big run up and its big crash down, and just trying to work its way back. Is this something that has caught your attention at all?
Well, here's what I'm looking at. If you're going to look at sectors, you want to look at how it's impacting the household balance sheet. So things like I talk about oil and gas, real estate is another one. How are real estate companies doing? Now, one thing that has been taking a hit lately is the real estate sector. And if you look at the Dow Jones Real Estate Index, it actually isn't doing very well, considering the fact that we're in what I would probably the late stages of the peak buying season of the year. So that doesn't bode well for the third and fourth quarters. And therefore, what you'll see, just historically speaking, when the real estate sector does not do well following that second quarter buying binge, that usually translates to weaker retail sales in the third and fourth quarter, which usually means a weaker back-to-school shopping season as well as a weaker holiday shopping season. So when you incorporate all of that, we may have some pressure on the household balance sheet on the discretionary income level to close out the year. That could be a challenging risk for the stock market. But even with that said, unless you find yield elsewhere, stocks are definitely the place to be.
Okay, S&P's recovering from their morning lows here, trading up $1.50 unchanged. Todd, you're looking for that move towards 17,000 today. Hit 974. Should be interesting to see if we get to that level. As we close out the interview here, any final tip for investors in the Options House chat room?
Okay, well, I think what you want to be focused on, if you're looking at commodities, it's clear that on the traditional side, you can suspect that any threat of inflation or geopolitical risk, that you'd have more of a appetite for gold. Gold is obviously not trading well. So with that said, again, if you're looking for that yield, you are your best guess would be to look at obviously your larger blue chip companies, your big oil companies. But when you start thinking of the commodity sector, it might be best just to stay away from gold right now.
Okay, we've had Todd Schoenberger on, and founder and managing partner of LandColt Capital LP, not backing off his bullish stance one bit here from the last time that we had you on. We'll keep an eye on your projections. Thanks a lot for this well-rounded interview. You covered a lot of things, and have a nice 4th of July, and we hope to have you on again soon.
Likewise, Joel. Thank you so much. You take care now.
Okay.